That's not what I meant. I didn't mean I changed my name.
You are now rusty.
I don't want to be rusty.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
The Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. The What and the Why is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a casual conversation of news in the markets.
So, see, I don't. Oh, what's going on with the payroll numbers, Bob? Because this is Payroll Friday, the first payroll report for 2018, covering December 2017.
Payrolls were just right.
Just right?
Yeah. So we missed on the headline number, right? 148,000 versus 190 expected. Interesting thing, and I actually wrote a piece on this that I've mentioned it before, is that while the overall trends in ADP payrolls, which comes out on Wednesday, the private payrolls number, and non-farm payroll, while the overall trends are similar, it's not, they're not a one-to-one. They have no one-to-one correlation. In other words, you don't have a huge beat on ADP, then you have a huge beat on non-farm. It just hasn't worked that way. It's an uninspiring chart when you see it. There's one from Y Charts that I found that shows like the last 3 years worth. And again, trends in the same direction. So I actually didn't think this would be a beat. I didn't get to tell anyone. I did write it in my Nadex article, but I didn't get to tell anyone that I didn't think this would be a beat. But the wage number didn't really move, which is a good thing. We've talked about this in multiple podcasts. You had, going into the busiest retail season of the year, you had a loss of 20,000 retail jobs. Now remember that's seasonally adjusted. What that means is that the BLS, the Bureau of Labor Statistics in the Labor Department, will actually they'll adjust the number because of the temp jobs hired on the holiday. So they adjust the number, but the temp jobs were much less than normal, hence the negative number. So there still were additional retail jobs that were brought on, but it was less than the adjustment number that they use, ending up with a negative 20,000. But interestingly enough, courier jobs, delivery jobs, up 19,000 in that same period. So we're seeing this transition of the economy. So that's one of the cool points about it. Healthcare was up. Government jobs were not of any note. Construction jobs were up. And the wage number, again, didn't move down. We had a 4.1% unchanged unemployment rate. We had an unchanged labor participation rate. But there's another number that's not released here that's kept track of by Bloomberg, and I saw it on Bloomberg this morning. It's the aggregate wages, which essentially means they essentially aggregate hours work, GDP, and unemployment to figure out if people are actually getting paid more per hour in aggregate, and that trend is still slightly up. So this particular number might make the Fed think they're moving a little bit too quickly, because it was not inflationary, it was not deflationary, it was not showing signs of a poor economy, it was just right. That's like why I call it
porridge.
Yeah, it's a Goldilocks number.
What if you don't like porridge?
No, what are you going to do? Porridge comes out once a month, you got to have it.
That's your answer?
Yep. Okay.
Did you see? We've talked. I haven't thrown a food thing in here for a long time, but Taco Bell is adding a new $1 item to their $1 menu. It's the French fry burrito.
Wow.
So they are testing a seasoned French fries and a fry stuffed burrito at some locations, and they're going to roll it out, I guess, nationwide. But it's going to be a $1 French fry burrito, and then if you upgrade to Supreme or Grande, of course, which will cost extra, you can add ground beef, pico de gallo, sour cream, and other fixings. But the base one for just $1 is a French fry burrito.
Wow, it's great for vegetarians.
It's. I wonder if there's like refried beans in there with the French fries. I need something other than just fries. I have to go investigate this further, but this just popped up yesterday, and I've not spent a thorough enough time investigating the new French fry burrito, but I thought I would get it in the show. The lemonade company had changed their name to Long Blockchain.
Mm-hmm.
So remember, their stock went from $244 to $525 a share just because they changed their name. Now today they announced they're going to issue 1.6 million more shares at their $525 a share price, and they're buying 1,000 Bitcoin mining machines.
Yep.
So those Bitcoin mining machines each are $2,725. I just want to know what they're doing with the other 5.675 million from their additional. So that's all you need to do if you're a public company. We should have gone public. Change your name, put blockchain in it, buy some mining machines, and then you pocket the rest of the cash.
Right.
Oh boy. I guess that's a good transition into the crypto segment. So what about all the other, Bank of England is talking about its own digital currency now. The Bank of England could get the green light for its own digital-style currency as early as 2018, the Telegraph disclosed. There's another thing here. The criminal underworld is dropping Bitcoin for another currency. Bitcoin's losing its luster as some of its earliest and most advanced criminals, giving rise to a new breed of virtual currency. Privacy coins such as Monero, designed to avoid tracking, have climbed faster over the past couple months. So the European Union's law enforcement agent Europol raised alarms 3 months ago, writing the report that other cryptocurrencies such as Monero, Ethereum, and Zcash are gaining popularity within the digital underground because they can't be tracked as well as Bitcoin can, because Monero spoofs the addresses. So Monero, the way it's different, it encrypts the recipient's address on its blockchain and generates fake addresses to obscure the real sender. It also obscures the amount of the transaction. No, but that's how Monero works, and Zcoin does it slightly differently, but so if you want to have everything anonymous, that's one of the reasons we sort of liked Monero in the not from the criminal aspect, but if you really want to be anonymous. So that's the interesting thing is we don't know how this is going to shake out, but a lot of people now are running to Monero and Zcoin and the other privacy coins if they really want to obscure what they're doing, because a lot of these companies now can reverse engineer the blockchain and figure out where all the transactions are going and figure out who was doing the transactions and freeze the accounts essentially and prevent them, because what governments are doing now is if they expect it was criminal activity, then you can keep your let's say Bitcoin, but you just can never convert it into anything else. I mean, some of these are pretty gosh darn private. I don't know if they'll ever be broken, but since you're spoofing all the addresses it's like burying the transaction in amongst a bunch of other crap. So we'll have to see if it can ever be, but it's a hell of a lot more private than a number of these other ones. So.
Yeah, what's interesting to me is that I've had people say to me on interviews and otherwise, say, why would I get involved with something that criminals like? And the first thing I say to them, is there any cash in your pocket? Because you're involved in something criminals like. I mean, it's just a nonsensical argument. That's why I really like the term privacy coins. I really like that term, because that's really what it is. You can be living in a 100% quote-unquote legal life and want privacy. There's nothing wrong with that.
Now, in other worrying stuff, did you see the article? I sent that to you, Bob. South Korea students dive into virtual coins, even as regulators crack down. These other people were going to, I quote, "I no longer want to be a math teacher," said 23-year-old Eo Kyung-hoon, who founded the club Crypto Factor. Quote, "I've studied this industry for more than 10 hours a day over months, and I'm pretty sure that this is my future." That really, how long have we watched the markets for 10 hours a day? For years. He studied it for months, and now forget being a math teacher. I'm just going to be a full-time crypto trader.
Yeah, it was, I wouldn't have considered myself a market expert until I did that. Okay, so I had 7 years on the trading floor before I started fully trading for myself. I then lost a lot of money, and then went and worked on computerized trading. And, Mike says 10 hours a day, that's cumulative, but I've mentioned this before. My preferred charting time frame's 4 hours because I could wake up every 3.5 and check the closes and see if any of the trades have triggered, and did that for over 3 years. So it was a combined close to 11 years of watching this stuff before I felt comfortable with it.
I mean, how many hours do you think you have in at this point? Well, I mean, what's the common adage, like 10,000 hours?
I'm not smart enough to do that math. You need 1,500 hours to take the barber license test. To become a barber
like
in Illinois.
Haircut barber?
Yeah. To become a barber, you need 1,500 hours of actual clock hours of schooling before you can even go take the test.
Huh.
So that's a year of 30 hours a week, right? Approximately. But the licensing of all these skill sets is a fairly new thing. It's less than 100 years old, where you have to get a license to do anything professionally. And it's a money grab, right? We know that. You don't have to get a license to trade cryptos.
And you don't have to get a license to launch a cryptocurrency rewards program like the Hooters franchisee that surged 41% because they announced
genius.
The Mobility Merit tokens.
I'm sorry, that's genius.
They are going to
negative to say about that.
So Hooters franchisee whose stock was languishing has now a cryptocurrency rewards program, and it goes up 41%. But the SEC just issued, that was yesterday, on January 4th, we're recording January 5th, quote, "If you lose money, we can't get it back." This is their new release. It's NSAA's release is a timely and thoughtful reminder to Main Street investors to exercise caution. The release recognizes that cryptocurrencies, while touted as replacements for traditional currencies, lack many important characteristics of traditional currencies, including sovereign banking and responsibility, and now are being promoted as an investment opportunity than efficient mediums for exchange. And they come back again, where is that? The SEC and state securities regulators are pursuing violations, but we again caution you that if you lose money, there is a substantial risk that our efforts will not result in recovery of your investment.
Yeah, I lost money in that segment of my life that I was talking about on the podcast. I wonder if they can help me get that money back.
Well, again, because people think a lot of people are naive in this, and it is still the Wild West of trading. And, there is a lot of fraud out there in the crypto world.
That should be left in the show because that's a better example of what's going on than what they put in their press release. That's the funny part to me. Is like, Mike, so you have known some people that have quit their regular jobs to do this. Have you heard anything with the 30% down? Or did they all just make a fortune off that?
Well, they're again buying the dip, and What
about the 30% days we had a couple of weeks ago?
A lot of them took a bunch of their money and then put it all into Ripple, and now it's just a rotation thing. So they're still sitting in some of these Bitcoins that are down, but they've also made a bunch of money in Ripple and Ethereum over the last couple weeks. So it's going to be interesting once a bunch goes down at the same time. It's
going to be really bad.
Because right now, if I mean, people took some of their money, and buy the next dip, buy the next hot one, and everybody piles into it. They make some money, and then they get out of some of it, and then they just wait for the dips again. But what I want to see is when we get a big dip in everything, and then there is no rotation. Like there's just a big pullback across the board, and then everybody's like, I bought the dip. I bought the dip. I bought the dip. Well, I think you had to treat it still before. I mean, now it's in the U.S. Every crypto trade is a taxable event. It's official now, but I don't think. I mean, technically, you had to report every gain or loss period before. I mean, you could use losses to offset gains, but even if you made money exchanging cryptocurrencies, you still had to technically report it before now. So now it's just officially, you just have to report your gains versus your losses. And I think this is going to still have to get clarified. I don't think, again, a lot of people know how to do this because they were just like, oh, you trade it back and forth, but this is going to open up a lot of people to a world of shock. See, what they were getting into, this is what I don't know, because this has not been clarified yet. Is it FIFO? Is it LIFO?
Well, that's what I was just going to say. So, first of all, neither Mike nor I are CPAs, but we've both had a lot of experience with our own taxes and trading and the profits and taxes. And there are certain designations for certain types of trades. Like futures, you can treat half of them as short-term capital gains, the other half as long-term capital gains. Stocks are treated differently. You hear about tax selling at the end of the year, and that's because these things have had rulings and they've had special designations. Cryptocurrencies don't have that yet. But you can be rest assured that if you converted any of your gains into U.S. dollars and spent them, the IRS would want you to report that as regular income. Here it is, Cryptocurrency Tax Plan Q&A in plain English. Again, this is him just advertising his thing. All right, I'll find something. I can even reach out to him and ask him if he promises not to charge me.
I mean, I think this, again, we don't know how everything is because you have long-term gains, short-term gains. If you leave everything in the crypto world, how is that different than converting it to fiat currency? All this has to shake out, and I'm not even an expert in this yet. You do have to track. I would recommend tracking every transaction you make, and it's also in terms of what I just brought up. Though this is what's interesting: are we doing LIFO or FIFO? Which is in terms of losses. Are you doing last in, first out, or first in, first out in terms of gains and losses?
All right, I'm sorry, Mike. I have the article, and again, this is from an Illinois tax attorney. I'm not going to give his name, but he was written up as one of the top young tax attorneys, like top 40, under 40 types of guys. And he's got a cryptocurrency Q&A on his LinkedIn. And the first question is, do I have to pay taxes on cryptocurrency gains? And his answer is, in a word, yes. Rumors swirl that digital currency gains are not taxable. To be clear, this is inaccurate. Anybody who has taken part in a crypto to fiat or crypto to crypto trade must include resultant gains in their income calculation. And then he gives an example. If you purchase Bitcoin for $500, then sold over $10,000, you're required to report a $9,500 gain. Now, how does the IRS classify cryptocurrencies? By the way, he goes into more of that, how you put it on 1099K, but we're not talking to people solely in the United States. But how does the IRS classify cryptocurrency? In the eyes of the Internal Revenue Services, cryptocurrencies are considered property, a piece of property with a fluctuating commercial value. When a party trades one commodity for another, authorities tax the dollar differential. So that's where it is right now. They may change that in the futures, but yeah, they may change that in the future. But right now they're viewing it as property, so as an asset. So if you make money on an asset, that's what you pay on. So it's a capital gain. That's my guess.
And if you lose money on the asset,
I guess you could use it.
So you can deduct your losses versus your gains. But this is where a lot of people are just going to get to tax time and not know what to do if they've been trading the cryptos.
Make money on an asset, that's what you pay on. So it's a capital gain. That's my guess.
And if you lose money on the asset,
I guess you could use it.
so you can deduct your losses versus your gains. But this is where a lot of people are just going to get to tax time and not know what to do if they've been trading the cryptos. We have a lot of interesting things. See, I cannot pronounce one of the co-founders of Ethereum.
Steve, what's his name? You can pronounce his name, Steve Larson.
Yeah, but I'm talking the
Vitalik Buterin.
Yes,
It's actually Vitalik
Buterin, who was tweeting last week that all crypto communities, Ethereum included, should heed the words of warning, need to differentiate between getting hundreds of billions of dollars of digital paper wealth sloshing around and actually achieving something meaningful for society.
He also supposedly was going to sell all his Ethereum, but the company holds Ethereum, right? Oh, no, that's Ripple. Actually, Steve Larson is Ripple as well. Sorry.
Yeah, Steve Larson, who became now he now richer than Zuckerberg for a little bit?
He was richer than Sergey Brin.
I mean, this
not
is
richer than Zuckerberg. Worth $59.9 billion on paper. Steve Larson, the Ripple founder.
Some of this is getting insane. Would you take your salary paid in Bitcoin?
No.
This is quote, these days a lot of people are looking at part and sometimes all of their salary paid in Bitcoin, Bitwage founder Jonathan Chester told BBC this week. Because it doesn't go down. It doesn't go down. It's a way of accumulating Bitcoin and recurring. I love this. It's a way of accumulating Bitcoin and cryptocurrencies without worrying about whether you're buying at the right time. See, it's just dollar cost averaging, with the caveat that unless your salary happens to get processed during a flash crash, you never buy at a lower price. I'm more concerned about businesses, though, because of businesses, they have servers that all of a sudden, once these patches come out over the next couple weeks, if some of these server farms take X% hit, a lot of companies just can't run out and replace all their hardware. So it's going to be interesting to see the new benchmarking standards that come out after all these things are patched. And Amazon has announced they're patching everything on the back end of their web services, which is their huge money maker. But then anybody who uses front end stuff that has control over, they have to patch it. Anybody who has their own PC or Mac, even iOS, has to patch their things. So we shall see. And we already had the Apple battery scandal, Well, what happens when you put on a patch and it affects your older iPad or phone or Mac computer and it slows it down a lot? We don't know.
People really have no concept of how much of their life they're turning over. They really don't. I mean, it's simply crazy. You guys heard about this Amazon Echo mirror? Have you heard about that?
We talked about the mirror. The fashion
We talked about it last week?
No, we talked about that the fashion mirror?
Yeah, it's out. For sale, where it's basically staring at you.
Right. So, what were you going to say about the giving away the privacy?
Yeah, I mean, it's just literally, it moves so quickly. The amount of privacy we've lost already is not recoverable, in my opinion. It's just not. A lot of the times, the pendulum swings, and then it swings all the way back. I don't think this one can swing back. I don't think the privacy one has the ability to swing back.
We'll find out, unless we're all in a simulated blockchain environment.
Well, they're going to be like Paulie in Goodfellas, where he doesn't have a phone. Everyone's just got to whisper stuff in his ear. And then they just run over and give his answer to the guy. It's all talk.
So last week he tweeted, I promised we would make a pickup truck right after the Model Y. Have had the core design engineering elements in my mind for almost 5 years and dying to build it. So now...
do whatever he wants.
Yes, but they actually delivered. It came out this week. They delivered 1,550 Model 3 cars in Q4. and they delayed their guidance because remember they were originally 5,000 by the end of last year. Then they went 5,000 by Q1. Now they're pushing it back again, saying we're shooting for 5,000 Model 3s a week by the end of Q2. So what's also interesting is they released their total production numbers in Q4. Q4 2017, 24,565 vehicles. Total production in Q4 2016, 24,882. So they actually produced fewer vehicles this year in Q4 than last year. Oh, are we at peak Tesla yet? Let's see.
Peak Tesla.
Well, I see some of these interviews. There was a guy on CNBC yesterday. We can't view Tesla on what they deliver. We have to view them in the totality of the impact they're making on the world. And if they never make money, it doesn't matter. Their stock price should be worth.
So they're MySpace then?
Yes.
Okay.
Actually, I think Tesla is. You know how quickly MySpace went away? I mean, it was like everybody, MySpace, and everybody, if you bought, like 6 months later, if you brought up MySpace, everybody was like, you had the plague if you were still on MySpace.
I know. I use it as a joke all the time when people ask me if I'm on Facebook, which I'm not. I go, no, go to my MySpace page.
Well, no, but oil it hit my other target. I'm out of targets for oil. Actually, it hit my target 60.78. I guess my next target is 62.58, and we're trading at 61.41 right now.
Oil's getting super interesting.
Why is oil getting super interesting?
Because it's the buzz is starting to go around, and I've thought this for a little while, but I didn't have any sort of, I don't want to say evidence of it, but the buzz is starting to be believed that production's being overestimated by the EIA. And there's also speculation that OPEC has known this. It's part of the reason they've been very, sort of content with their production cuts, not having to ramp them up, knowing that eventually price would catch up because you'd continue to get lower and lower inventories, specifically because production's being overestimated. So if that's the case, if that's true, then eventually there's going to be sort of a reckoning of where the price of crude oil is versus where people expected the inventories to be. And I've said this for a long, long time. Whenever people say that if the price goes up, the shale producers will just turn the wells back on. I mean, Mike, you and I have been saying this for a long time. It's not a faucet. They don't just turn them back on. When prices went from $104, $105 down to $26, it didn't happen overnight, but shale producers laid off over 75% of their workforce. And you can't just turn those people back on. Like, you can't just get those people back. A lot of them had migrated to the states where there was shale, Texas, North Dakota, South Dakota, Oklahoma, and then they went back home, right? They literally went back home when the price fell and they were producing less and less. So granted, a big chunk of those employees were not necessarily needed. Those guys were making so much money that they overhired, but you can't just turn spigots back on. So it's interesting to think about if it's right. And Harold Hamm, who is the famous oil guy who's got a huge hand in shale himself, is one of the people who's kind of blowing that trumpet that production is overestimated. This price could go a lot higher.
Okay. So should we buy oil or Bitcoin?
We talked about this last week. Bitcoin has 5 times the volatility of crude oil, and crude oil has always been kind of known as our volatile contract.
But real quick, because I actually have to go in a couple minutes. We had some comments out from Bullard this week.
Mm-hmm.
Bullard, Bitcoin is not something central bankers need to worry about. He reiterated that. Mm-hmm. He's also not concerned in the surge in equity prices since it's not based on extensive use of leverage, unless you're short the VIX. That's the last part I added. Mm-hmm. And Bullard also said the Fed should avoid inverting the yield curve. So that was his little equities aren't overvalued, we shouldn't invert, and we don't need to worry about Bitcoin.
That actually leads into my why, if you want me to go there.
Sure. Right after I say the GDP Now model forecast for fourth quarter is down to 2.7%. That's all I have to say. Now it's over to your why.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann, and ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
My why is actually on yield curve and yield curve inversion, potential inversion on the Fed, because what's going on now with the yield curve itself is interesting on a number of levels. Bloomberg Intelligence predicts another 20 to 30 basis points of flattening in the yield curve in the U.S., which would put it down just about flat and put it down to actually 20 from like 2/10. So it's be very close to flat if that happened. And people talk about the flat yield curve predicting recessions, and people also talk about bull markets don't die of old age. The Fed kills them. And that, to me, is what's happening now. And today's jobs number is actually kind of going that way, where you've got basically flat wages year on year. You got a slight uptick month over month. You've got 4.1% unchanged on unemployment. You've got no movement in the labor force participation rate, which goes to the story of people don't have the skills to get the jobs that are available. And you've got a flattening yield curve. If the Fed starts pushing on this particular string, they're going to move the front rates up, and they're going to, and the back rates are going to go down because there's no, or the back rates are going to stay the same or even go lower because there's no sign of inflation still. And this is why I continue to say that while the Fed is predicting 3 rate hikes for 2018, I think they're much more likely to do 2 than they are to do 4. They're much more likely to become more dovish than they are to get more aggressive. And I'm going to continue to say that. So what we have here is a situation where there's argument about whether the flat to inverted yield curve causes recessions or whether it's a symptom of a Fed that's been too aggressive and it's pushing the economy into recession. I say it's a symptom. That's my why.
You know what I just figured out?
What?
When we do go into the next recession and we need a government stimulus program, what it should be.
What's that?
The government, instead of like cash for clunkers and everything else, government's going to buy everybody a Bitcoin mining computer.
Mm-hmm.
And then everybody's employed mining Bitcoin. Think about this. People are pulling on electricity, so the electricity demand goes up, all right? Which means we have to then up our infrastructure, so then we need an infrastructure package, to modernize the whole electrical grid. Meanwhile, everybody's getting rich mining Bitcoin.
This is a fun. That's it. Got to know what?
I told you what my what was. It's my brilliant infrastructure plan for the next recession. Right.
Well, then, Mike,
we all get to mine Bitcoin, and we're all rich.
Thanks for having me this week.
Well, you're very welcome. It's a pleasure of doing podcasting with you.